Hey guys, welcome to the C-Suite Connect webinar series. I'm Billy Toh, the Regional Head of Retail Research at CGS International, and I'll be your moderator for today's session. Now, first of all, thank you everyone for taking the time and your lunchtime to join us. Whether you are tuning in from Singapore or Malaysia, we really appreciate you being here. Now, if you are joining this series for the first time, feel free to say hi to us on the chat. Now, for those of you who are joining us for the first time, just to let you guys know, there will be a replay session that will be uploaded on our YouTube channel. So don't forget to go and subscribe and follow us on for more content and insights. We'll also be uploading the key takeaways of the webinar on our research portal later on. Now, we are currently in a very interesting phase of markets. I think on one hand, we are seeing rising global uncertainties from geopolitical tensions to shifting interest rate expectations. On the other hand, we are also witnessing a strong structural trends, especially in areas like industrial automation, AI adoption, and energy transition. So today's session is really about cutting through the geopolitical noise and focus on some of these structural trends. So we've got ISDN Holdings with us today. It's a listed core on SGX and delivers solutions that power Asia's industrial futures. Now, the group's components and system power semiconductor factories, advanced medical devices, clean energy plants, and EVs, and more across Asia. There are over 10,000 clients throughout Asia that relies on ISDN solutions to deliver advanced automation. Now, today we are quite fortunate to have Mr. Teo with us. He is the founder, MD, and president of ISDN. Mr. Teo, I just want to say hi, maybe.
Hi, thank you everyone.
Yeah, so he is a mechanical engineer by training. Mr. Teo has been at the forefront of the industrial technology sector for nearly 4 decades. Now, so today he will share with us on some of the company's latest earnings results and some of the outlook for the industry and the company. So without much further ado, I'll pass the time to you. Over to you, Mr. Teo.
Thank you, Billy. Thank you everyone. Good afternoon. Thank you so much for spending time with us, attending our presentation. Try my best to answer all your questions later on if you have. And so without further ado, I'd like to start the presentation. So who is ISDN? So I describe it with a 6-word story: powering smart operations for sustainable growth. The business that we do are related to smart operation with hardware, motion control, automation, software, to the cloud with AI, all these that make the plant, make the factory, make the process smart. So in order to achieve sustainable growth, reduce the wastage, increase the productivity, and improve the environment. So to have a friendly, friendly environment. So that is our vision and our mission. So in a nutshell, we have the full stack of solution for our industrial automation, the 4 pillars that just now you have seen. And what we cover is from the field level, the component level, we have all the smart little motor control here and all the sensor, whatever. These are the few level of products that we offer to our customer. And with that, we add on the PLC control, PC control, so to make it autonomous in a way. Then we have a SCADA software to supervise, to collect all the data. And we offer software to do planning for the production to make sure that the efficiency is monitored and the productivity is monitored and so enable us to improve every day by day. So we come to the management level. We have the software that you could see them from the cloud or on premise, and with the AI integrated, so that it becomes very easy for predictive maintenance to look ahead of what is coming and what will be the outcome. So I've covered the vision and strategy. So right now, let me go to the, come back to this. We see we have the right technology, we have the right customers and the right experience, and our strategy is to growing our market size, growing the market share, and enhance our competitiveness so that we are always ahead of our competitor and diversify our growth. With our platform knowledge of industrial automation with software and hardware, we can serve many verticals like semiconductor industry, special purpose machine maker, manufacturing plant, or these medical industries, and a lot more that when they require automation, semi-automation, or fully automation, and they want the solution, they go to cloud, and all we are able to offer because of these 39 years of accumulation of experience and the knowledge and the engineers that we have, that we are confidently to serve the market with our full stack of solution. So how the environment look like? We see a geopolitics issue, all right? China and the US tariff was actually quite severe last year, and it continued to this year. And we see that because of all this China and the US tension, we see for Asia shift, we see China +1 evolution, and that is the environment that we are in. And demographic across all these developed country, the population is aging, and also the manufacturing requirement is getting more and more sophisticated. All this required industrial automation, so to replace all the shortcoming, and the technologies wise, and we see more and more adoption of industrial automation and AI, and to make it autonomous process and industrial diffusion. So with the knowledge that we have accumulated, with the manpower that we have, we are quite confident to offer the solution to serve the market and serve our customer needs. And industrialization, of course, and people talking about sustainable, and that is the key or the priority for a lot of business owner and the manufacturer. And again, there's a need for the Asian native supply chain, all because of this tension between the US and China +1. And we are well positioned in this environment. We have a long-term growth plan, and we have a full stack of tech solution, and we have many offices in China, Southeast Asia, and even India. We have set up a new office last year. And we are into this renewable energy, not only supplying the solution to the EPC contractor. Right now, we own and operate, and we develop hydropower plant, which actually is the future of this renewable energy, because of all this energy cost, and especially right now with the Middle East tension, we see there'll be a lot more attention into growing the renewable energy in all the countries. So under this environment, we expand our operation in Taiwan, in Malaysia. We've doubled our investment during the COVID and the last few years, and we are seeing results, and we're preparing ourselves for the next wave of the semiconductor growth. In Southeast Asia, we see there are more back-end equipment manufacturers, and these are our target. And for demographic-wise, right, because of this AI and automation, like what I say, so that give us a lot of opportunity to serve. And for our own manufacturing, we have been focusing in creating our own products, and to serve the market better, to make ourselves more competitive. And so that is always in our plan. And with this hydropower business, we already have 3 power plants operating. It constantly giving us a very steady cash flow to fund our other operations. And additionally, we have 2 more plants under construction. It should be ready by this year for operation. So now let me move to the results. Actually, 2025 was a very tough year because of a tariff issue, and we see a lot of companies that actually are struggling. But we are very happy with our resilient growth momentum, in our segment, in our geography that we serve. We delivered about 25.9% year-on-year growth in our core profits. So if you look at the table at the bottom, there's a 25.9% growth from financial year 2024 to 2025. And we are paying, we are rewarding the shareholder the 25% dividend based on the core profit attributable to the shareholder, which is 9.7 million. But the reporting profit was 6.8 million. It was due to a unrealized long-term forex loss, and that I will explain in the next few slides. Why is it not important to us and also to you that you should focus on our core profit? And later on, I will also share with you that we have a way so that in future this one will not hit our P&L. So if you look at the top line, full year 2024, it was 372.4 million, and full year 2025, it was 440 million. On a constant currency term, is even higher. I will show it to you. So across all the segments, across all the geography, it was pointing upwards for 2025. So if you look at the group level revenue, it is from 372.4 to 440.2 million. On a constant currency wise, it is up by 21.1% year-on-year from 372 to 450 million. And the segment revenue for the industrial automation, China actually grew by 5.5%. And outside China grew by 19.8%. So you can see that the China plus one effect, you can see the Asia for Asia shift. And if you look at the constant currency, actually China increased by 6.9% above the GDP growth of China. And if you look at the operating revenue for our renewable energy, there's a slight dip because of this up and down effect of this water supply. For sure, it is always up and down. Gross profit and margin breakdown by segment. Gross profit for the industrial automation, you can see that it grew from 84.6 to 92.6. For renewable energy, from 10.3 to 12.6. One thing to note, renewable energy only contribute 2.2% to our revenue, but it contribute 8.5% to our gross profit. And overall, industrial automation actually grew by 0.1%. Renewable energy actually down 20% because of the construction income that we recorded as a revenue with a very low margin that pulled out this gross profit margin. So overall, is about 1.6% below, from 25.5% to 23.9%, all because of the construction income that we recorded in 2025. Okay, this slide just to explain further why is there unrealized forex exchange loss. Because during the construction phase, we actually record the construction income because of the project power purchase agreement is build or BOT, build and operate and transfer. Because of that, the accounting system standard require us to record this construction income, and it will last for another 25 years. And so there's a mark-to-market that we need to do every month. So back in end of 2024, the exchange rate of $1 to Sing dollar, it was about 1.345 approximately. But come to June 2025, it was 1.27 to 1.28. So that brought us 4 to 5 million unrealized, 4.5 million unrealized long-term exchange loss. But this is a non-cash item, it's invisible. So it doesn't affect our cash flow. And so this is why what we are going to do moving forward is for our A energy which is a holding company in Hong Kong. We are going to change the reporting currency from Sing dollar to US dollar. With that, we will move this unrealized gain or loss. It may be gain in future, we do not know. It will go to the OCI. It will not reflect in our P&L. So that will at least make us it make us easier to look at the number or the performance. So like what I say, we reward the shareholder based on 25% of our income. So that is 9.7 billion. We disregard the long-term unrealized forex loss. And 25% has been our practice for many, many years in the past. So how do we build ISDN? We build ISDN in these three areas: technology, capability. We continuously improve, right? And in this our technology that to serve the the high growth industry like data center, like this. We see a lot of potential for metal injection molding, so we invest in a new plant during COVID, and we see a compound annual growth rate of 73 to 78% for the last 5 years for this business that we set up. Is quite promising. So we constantly look at the market demand and we go to the right target segment to put our money in and increase the capability, improve our know-how and knowledge. And of course, automation needs is there. So we put our solution together. So we are able to offer a smart warehouse in China and in Singapore. And we have done one 3PR project last year to serve 3PR warehouse needs. So, and with artificial intelligence, we do have a solution that we have developed. We see that it is quite potential for a lot of factories to adopt. And so we have this solution standby that we are going to launch into the market this year. And pharmaceutical, we have set up a company that in the last 3 years, just in the second year, we managed to break through into the medical contract manufacturing market. That is actually give us a lot of confidence that we are moving into the right direction, getting into the right technology and with the right capabilities. For market-wise, Asia is our focus. And as you know, ASEAN is the largest trading partner of China. And we are positioned in the center of ASEAN. So with our knowledge, with our connection with the China counterpart and all the business partner in China, so we become a bridge to a lot of investment from China to Southeast Asia, and even like our hydropower, we engage a lot of EPC contractor from China, and we even invest into an EPC contractor from China in Indonesia for our hydropower plant. So our focus is very much in Asia for Asia and China +1. And portfolio expansion because of all these tariffs and because of this rare earth magnet issue. So we begin to do production in China together with Maxon Motor to serve the China market. So we have been reacting, we have been preempting to the change of the industries. As you can see, recently we make an announcement for this subsidiary that we invest about 3 years ago. It is a very good team. They have the knowledge of the drone operation with the AI software that we have developed together with Panasonic. We even make an announcement together with Panasonic. All right. So moving forward, we want to take Singapore as a test bed and to address the world market, because Singapore, no matter how, is still a limited market. Having said that, we secured a $1 million contract. We see that more and more of these drone application, and not only in Singapore, is worldwide. We are in the right place, at the right time with the right business. that we are operating. Industrial automation is our core, is our key. If you look at 2025, the global market is about 215 billion. Compound annual growth rate is about 9.5%. So people are expecting that by 2035, it is 533 billion. So the potential is good and it is growing. And with our positioning in China and outside China, with the China 15-year 5-year plan policy, that will help us. As you can see, that we are still growing our China business. And in Southeast Asia, we see a very attractive market right now. As you can see, our industrial automation outside China grew by about 19%. So we are focusing in the right market. And the supply chain shift, we can see, China plus one, Asia for Asia. We see more and more of investment pouring into Malaysia, especially in Penang for the semiconductor back-end industries. And also for China, that a lot of manufacturers, they are shifting slowly from China to Southeast Asia, not only for the rubber stamp, they are actually building up their factory so that they could claim, local manufactured product to serve the market and reduce the tension and create jobs for the Southeast Asian country. And the demographic issue, of course, that make industrial automation even more relevant. Looking at the numbers tell everything. Right, FDI into ASEAN rose 8%, whereas the growth globally it dropped 11%. And the manufacturing FDI actually grew by 150% to 44 billion last year. So these are all the numbers that tell us we are in the right place for the right business. So we have established our network since 1987 until now. And with 39 years of experience and with the knowledge that we have accumulated and with our partners in the industry, we really position ourselves in the right spot. Data center is another fast-growing industry. As you can see in Singapore, we already have 50 data centers in operation and in a pipeline 237 megawatt. Malaysia, even more promising, 21 data center operating, but in the pipeline is 2,000 megawatt. That is a huge number. And so we are trying to get into this market with our software, with our M&E service capability. As you know, we invested into a small M&E company who has 70 years of experience focusing in serving the data center market, and this is a profitable company. So with ISDN help, we hope to grow this thing much faster and bigger. Come to the clean energy, renewable energy. If you look at the plan of Indonesia, they have phase 1 and phase 2. In phase 1 is up to 2029. Phase 2 is from 2030 to 2035. For phase 1, their focus is more in gas. But right now, with this turmoil and the conflict in Middle East, I think the plan may change again. They may accelerate in the renewable energy for solar and hydro. So, but for the phase 2, you can see solar plus hydro will contribute more than 50% of the energy needs in Indonesia. And bear in mind, energy has 68,000 megawatt of hydropower resource and capacity. At the moment, it's about 10% in operation. So we already proved ourselves, we are able to identify, develop, and operate. And we have 3 plants that are operating since 2023 and 24.6 megawatt. And starting from this year, we add 2 more, which is 20 megawatt total to make it 44.6 megawatt. So that will give us a projected recurring net cash flow income about 14 million. besides, as I mentioned just now, we have invested into EPC company in Indonesia, mainly with all the China expertise into the company to help us to develop from A to Z for hydropower plant, for solar power plant. Business outlook is bright, all right? We are going to leverage on the foundation that we have built in the last 39 years with our know-how, with our production capability, with our partnership with the business partner in the world. We are working with all the world-renowned manufacturers in the respective market. So, and we continue to invest, all right, into this technology, into our capability, as you can see, and we capitalize on this Industrial 4.0 requirement, China plus one shift, Asia for Asia. And so, besides, we continue to improve in our operation, and cost cutting is always in our mind. All right. By then, I finished my presentation. Thank you very much for listening in. So I'm right now open for any Q&A. I have my CFO with me. So should you have any question, please voice out.
Thank you, Mr. Teo. Thank you for your presentation. I think that's a good one. Just give us a good overview on how the business are doing, as well as some of the background as well. Right, I think we do have some questions that have been sent in to us earlier on. Just gonna get those to get the ball rolling for us here. I think the industrial automation business that we've seen, the growth across China and Southeast Asia. I think in China the growth was about 5 to 7%. Am I correct?
Yeah.
Do you see an acceleration under the 15-year, 5-year plan, particularly in advanced manufacturing and AI-driven industries?
I think so, right? There are more and more money from the government pouring into this segment. So we really see a very promising outcome.
Okay, and your Southeast Asia market, I think, grew faster at about 18%. Just wondering, could you give us a bit of color? What sort of industries or customers are driving this outperformance?
This primarily is due to the semiconductor back-end equipment manufacturer needs. It has been quite bad for the first half of 2025 and before 2024, 2023 for the semiconductor back-end was quite low. But we see a spike actually in the last quarter of 2025, and moving forward this year, we see is more and more action in Southeast Asia and in Taiwan as well because of this AI-driven demand, and we see more of this equipment is needed in the market.
And just wondering, this is it usually a replacement-driven demand, or is it a new capacity expansion from your customers?
It's all new capacity.
It's all new capacity lah.
Recurring is it does contribute, but very little.
Okay. You talked about the data centers earlier. I think the potential of the data center growth. Just wondering, how much is that within your group, and then will that translate into something more meaningful for the group in terms of earnings?
Oh, at the moment, it's still pretty small, all right, as far as 440 billion is concerned. But we see that we are being recognized as one of the players in terms of servicing the data center, in terms of offering the software platform. We have a unified control platform that we can help the data center operator to improve on the efficiency and improve the productivity and lower down the manpower cost, because this software is very unique. The one that we provide, actually, it communicates with all different equipment manufacturers, and on one desktop, you can see everything. So that is quite an interesting approach for the data center operator whom we have spoken to. So we do have some inroad. We are supplying to some, especially there is one, the world number 2 co-location manufacturer. They actually have been working with us in many different locations.
Okay. There's a question from Gary. He's asking about your company's ROE as well as the net margin, which is relatively low. Do you see an improvement in this areas?
I can see that, right? And that because we have done a lot of investment in the past 5 years, especially in our growing our internal capability. So this will slowly, I'm seeing that it start to bear fruits. So that will change this situation.
Okay. And earlier you talked about, sort of the solutions that you can provide, on the data center front. Just wondering, how differentiated are your solution versus some of your competition? And are there like global competitions or is it more local? To give
Oh
us a bit.
yes, these are all the big boy claim in the data center. But I can see that there are a lot of old data center they are due for upgrading. So this upgrading may give us a chance, all right? And so this is where we position ourselves now.
Okay. And I think you also earlier you highlighted about your AI power inspection solutions via I think Nova Peak, correct?
Yes.
Just wondering how big can this new segment become relative to your core automation business? How long you think
I can't tell for time being, but I think that we are on the right track just within 3 years from nothing, from zero. We are experiencing a growth about double for the last 2 years, and this year we are still expecting a double digit growth, almost double. And because we already equipped ourselves with the right software that we could improve the productivity now. And doing the inspection is you need a certain know-how. All right, you collect thousands and thousands of images, but to churn out the report is another nightmare if you don't have an AI solution to do it. So we have been all right finding the solution and then working together with the business partner like Panasonic. So we have addressed most of the challenges. So we think, all right, this is the time to actually pivot and to grow much faster, not only in Singapore, but as well as other countries.
Okay. I want to expand on that question, but I think there's a one question from the floor. It's asking regarding your funding plans for growth and expansion for the business operation. How do you intend to do that?
Until today, we're still talking about our organic funding and all the debt financing from the bank or from financial institution. So we still do not have the plan yet for any increase of the share equity.
Okay, so a lot more on internal cash as well as borrowings lah.
Correct,
I see.
correct.
Okay. And sorry, just back to that question earlier, I think you talked about expanding into other markets. Could you share which markets you're looking at and identifying that, key areas that you want to tap onto?
Uh, no specific. We just want to see which market actually is more promising. And so groundwork is being laid, and we'll see which country comes first.
Has there been any conversations with any parts of the world?
Pardon?
Is there any conversations ongoing with any parts of the world that we that
It's still the Asia market, the 6 hour flight zone that we try to target.
Okay, okay. Yeah, and I think on your renewable energy, I think that's the growth is there, but I think at this point the contribution to the share of revenue is still relatively small, right, compared to the industrial. Just wondering
Yes,
how do
yes.
investors think about it in long-term earnings contribution? Do we expect a 50-50? Do you have a target that you're looking at in the longer term basis?
Revenue wise, no, for sure. Because it's a different business model. This is high capex, long-term recurring income for 25 years or more, depending on the PPA. All right, so the revenue is small, but the gross profit margin is high because the operating cost is relatively low.
Okay.
We are talking about gross profit margin about almost 80 over percent to 85%.
Oh,
So
that's a
like just now there was a slide that I present. It contribute 2.2% to our revenue, but when the gross profit, it actually come out to be 8.8 to 9%.
okay.
So
And
we are in plan actually to spin out this. So we are hiring a VP to spearhead our renewable energy pillar, and with that we are looking into all these spin-off possibility.
Oh, okay, okay. And I think you mentioned that you will be growing it to the capacity from 24.6 megawatt to about 44.6 megawatt end of the year, right?
Yes.
Do you have any target that you're looking at in the longer term? Like what's a level that you guys are comfortable in managing?
Yes, in the pipeline, we still have about 124 megawatt. So it all depends on the how do we do our funding. So spin-off is one of the solution that, and we already get ready ourselves with the EPC arm. So in future, our plan will be focusing on engineering, identifying the valuable asset and develop it, right? Partner with some other equity partner, and ultimately, all right, when it's ready, that we can inject into a certain vehicle, so that this one will not reflect on our balance sheet, on our borrowing.
Okay. And could you just share with us, do you have any, because I think at this point it's just Indonesia, right?
Yes.
Do you have see any opportunities to expand beyond Indonesia for the renewables?
Yes, we do have some project that we are talking, but we are weighing the risk and reward and the funding aspect. So because these are very capital intensive, so we have to be very careful. But we have a lot of opportunity actually on the table.
Okay. And earlier you talked about your margin, I think being affected by the construction revenue, right? In the renewable
Yes.
sector. How should we think about margin trajectory going forward?
Oh, as
On,
long as we stop constructing, then we don't have to record the construction income. They are pure, tariff income.
so what's the range are we looking at? The normalized margin.
Oh, a normalized one. Hold on, let me check.
Gross profit. You're talking about gross profit. Okay.
Yeah.
Because if you look at just now the slide we talked about, because we have majoritarily our projects is BOT. So BOT means actually doing the construction, all the cost is already recorded during the construction phase. So in the on the face of the income statements, I only show the income, there's no cost. So that's why if you look at the gross profit margin will still stay very high, 90 something percent, that kinds of gross profit margins.
Okay. Sorry,
Yeah.
there's a question on I think it's basically on Forex. How, especially given the
Mm.
volatility now with the oil prices and everything, how would this impact the business and how are you managing some of these risks? Could you just give us a bit of color?
Uh, for us, you talk about the mini hydro. Actually, we use the water to generate a plant. So that's why I think we don't really need, uh, you know, s- uh, a lot of input, in terms of the oil and all these things. So I think at this juncture, we don't feel that, there's any impact, significant impact on the operation. But on a bigger, picture that we are looking at, because of the oil price and all this, that maybe shift, from the traditional energy to be a more clean energy. So that's why for our, in terms of our business, I believe that for a long run, definitely is better. This is how we're looking at it.
Right now, we look at the currency impact is only the accounting standard, reporting standard. So once we convert that Sing dollar base to US dollar base in our holding company in Hong Kong, that will actually resolve this issue. Other than that, our operating effect is in rupiah. We are operating our hydropower plant in Indonesia. Labor cost, everything is in rupiah. All right, and our tariff is based on US dollar. So we already mitigated the current risk between US dollar and rupiah. Only thing is, all right, come back to reporting in Sing dollar because we are a Singapore registered companies listed in Singapore Stock Exchange on Sing dollar base. So that long-term impact is always there, up and down. There is a translation kind of loss or gain. All right, but too bad, Singapore is too small a country. We cannot operate just in Singapore. When we operate overseas, we will have all this issue.
Okay. And I think earlier you also mentioned a bit, if I remember correctly, you mentioned expansion in markets like Malaysia and Taiwan. Am I correct?
Yes.
Yeah, could you share some of the strategy that you have in place to scale meaningfully in these regions?
Yes. In fact, we are targeting at the motion control and for the semiconductor backend industry. So we enhance our manufacturing capability in Taiwan. We used to have our plant in China. So we add on the Taiwan plant is just for the China plus one strategy, as well as serve the Taiwanese semiconductor market and also serve the Southeast Asia market. So these two investments, they are hand in hand and basically targeting at the semiconductor industry, the back-end equipment industry. So, and we see that we have made the right move and we see from the result. So we are going to, all right, move forward even more aggressively.
Okay. Just wondering with the AI and the Industry 4.0, some of the industry that is gaining traction, how is the customer demand evolving? Like, are you seeing larger project sizes or are there like faster adoption cycles that require a lot more investment?
No, I don't see a lot more investment here because we invested in a software company in Nanjing back in 2022. All right, from zero, now we have a full suite of Industrial 4.0 software, from warehouse management software, WMS, MES, manufacturing enterprise software, IoT, asset management, supply chain management. So we have the full suite of software that I can walk into any factory with in a bag. Anybody want to set up a factory, we have the entire solution, all right, for them to run. And once you put in the equipment, so the development on that right now is deploying. So we start deploying back second half or third quarter of this 2024. We are seeing promising result, and in 25, and we have adopted into a smart warehouse. Without that, it's very difficult because a smart warehouse and all the operator has different demand. So we must have our own software, our own developer, so that we can cater to a special needs based on the individual customer needs. And we are seeing this thing, all right, flourishing right now in China. We see more and more inquiry from the China company as well because of all this 15 and a 5 years plan of the China government.
I think you benefited quite a bit from that as well as the China plus one trend. Just wondering, could you share a bit on the competition space in China? Is it very
Yeah.
competitive in terms of price?
In China, all right, everybody talk about 内卷, all right, in Chinese. So it's very competitive. Okay. So, but having said that, if we can survive in a competitive world like China, we can survive everywhere of the world. So this is what I always share with my manager, share with my staff. We must be able to survive and grow in China, then we can grow in every part of the world.
And just wondering, to give us a bit of color, the next 3 to 5 years, do you see automation demand being driven more by labor shortages, or is it cost efficiency, or is it technological upgrades?
I think all of these are the contributing factors, right? Technology advancement for sure, because of this AI driven, you can see more and more of these, we call it physical AI, all right? And physical AI doesn't just refer to the humanoid robot, right? It refers to any type of automation equipment, because the AI will talk to any automation equipment to operate autonomously. So that market is huge because of the AI growth.
Okay.
And aging, of course, is another thing, right? And aging certain time may be less relevant because we are talking about AI replacing a lot of human in many sector, many a kind of operation. So I think it's 3 to 5 years, you see are more technology driven.
So a lot more technological driven upgrades.
Correct.
Okay. And just wondering for you guys, I mean, given the fast pace of the change, especially on the industrial automation and with AI coming in, what are some of the biggest risks that you're looking into that you can share with us so that, investors can pay attention on some of this stuff as well?
Say 2026, right? If not because of the Middle East war, is very promising. But even today, I still think that it is still a promising year as compared to 2025. And risks, I think if there is risk, it's basically the management risk because our business relies on human, all right, all the employees to, and we are basically offering a solution to solve the pain point of the industry. So the management is the risk. As long as, all right, I put the right-minded people together with the right policy, with the right, environment, and so far we have proven ourselves that we can manage this thing quite well. So we have a very steady middle management staff. We have a very steady workforce. So, but nevertheless, right, management is the key to our type of company.
Sorry, you mentioned that compared to 2025, you think that there's the is quite promising, 2020 going forward. Just wondering, what is the changes that makes you, that makes this environment change?
It's because of the semiconductor backend, we see that they start moving and they will be moving faster and faster, I think, for this year. So that will add, a lot of value to us in terms of business revenue.
And just wondering, because these are also a bit cyclical to an extent, right? If global growth were to weaken, how resilient is your automation demand compared to past cycles?
Okay. If you look at this global demand may fall short like last year, all right? But we are still growing. So based on the historical experience, we think that Asia is the focus of the future. You know that the economy is moving from the west to the east. So this is just the beginning, all right? And I'm very optimistic, in this part of the world.
Okay. If you look 5 years ahead, how would you envision ISDN to look like? Is it still going to be primarily on automation, or is it going to be more diversified with automation, energy, data centers? How do you see the company?
Now, data center is part of the business that we do under industrial automation. So if you look at our company, we only have two segments, industrial automation and renewable energy. Okay? Right. Even in the renewable energy, we require a lot of engineering know-how to operate, to identify the problem, and all this fall back to industrial automation. So with industrial automation, so we see a vertical of data center we're trying to develop. We see a smart warehouse vertical. All the while we have been in semiconductor back-end equipment manufacturer vertical. So there are many verticals that we are addressing. Back, many years back, we have these events to focus in China, but because of so we see that subside rapidly, but it has been made up by other segments like semiconductor and things like that. Our medical is another very strong sector in China that growing steadily every year with this medical robot, and it is actually putting in a lot of effort by the government to grow that segment as well. So we benefit from that area as well.
Okay. This one I just want to ask, I think, basically to understand how the MAS CQDP has changed. Are there a lot more foreign investors that talk to you guys after the MAS initiatives to drive, values and awareness on the small mid cap in Singapore?
We do have, on and off, some investors that talking to us. So I should say that the change in this stock exchange environment do help us, but it still come back to the preference of all these foreign investor. They are looking at a different type of focus. Some look at market cap, some look at liquidity, some look at the technology and what we can contribute. Like right now, we are talking to one very interesting and conglomerate who actually identify us as one of their partners to see how we can work with them to help them to grow the Southeast Asia market. So we constantly have a lot of all these foreign companies looking at us.
Okay. I think I just got another questions from the floor. Just wanted to know, I think in terms of I think you started integrating AI into inspection and automation. So how scalable is this? And do you see AI becoming a separate revenue stream going forward, or it will not?
I do not know yet because it's evolving very fast. But I'm very confident because we already come up with an AI solution that we have shown to some institution, some customers, they love it. They tell us that this is what they are looking at. So all depends on how promising is all this feedback now. So we are now testing the market.
Okay.
But with this software, we can plug into a lot of factory, a lot of equipment that help them to automate it in a way that with the AI agent that come into place and with the and that will actually bring them to the next level.
Okay. All right. Thank you, Mr. Teo. I don't think I have any more questions. Thank you for your time and congratulations on your results. All the best going forward to you guys. All right. Thank you,
Thank you
everyone.
very much.
Yeah. All right. If you want to watch the replay, feel free to go to our YouTube and look through our playlist there. And of course, we will also be uploading the key takeaways on our research portal. Thank you, everyone. Thank you. Bye.
Thank you. Bye bye.
Bye-bye.